Before you place your next crypto trade, hear this. If you're still relying on old YouTube strategies, Reddit rumors, or meme coin hype, you're not just behind, you're being used by smarter traders. The market in 2025 is evolving fast. Bots are trading faster than humans can think. Institutional whales are moving in silence. And retail traders? Most are still guessing. But here's the edge. There are 5 powerful strategies that experienced crypto traders are using right now, and barely anyone's talking about them. These aren't wild gambles. These are hidden frameworks based on data, timing, and psychology, and they still work. If you're serious about trading smarter, hit that subscribe button now, because every week I break down strategies the mainstream ignores. 1. The smart money divergence strategy. This is where most beginners lose money and whales make it. You see a pump, green candles everywhere. Twitter's hyped. Telegram's buzzing. Looks like a breakout, right? Wrong. Smart money divergence happens when price is going up, but key data points say otherwise. Think on-chain volume dropping, funding rates going wild, or whale wallets moving coins off exchanges instead of in. In 2023, Bitcoin hit 31K. Everyone screamed, "Bull run!" Meanwhile, large wallets were unloading. The price rose, but the volume was weak. 2 weeks later, boom, a 20% dump. Lesson: when price and metrics don't agree, follow the data, not the hype. Use tools like CryptoQuant, CoinGlass, or Glassnode. Watch for divergences between price action and wallet behavior. Trade like a shark, not like bait. And if this already opened your eyes a bit, do me a favor. Tap that like button so YouTube knows you're serious about leveling up your crypto game. 2. The pre-listing arbitrage strategy. This one's sneaky but powerful. Here's how it works. You find a token before it hits a major exchange like Binance or Coinbase. Right now, it's only trading on a DEX like Uniswap or PancakeSwap. As soon as the CEX listing is announced, price surges sometimes 2x or 5x in minutes. You're already holding. That's called pre-listing arbitrage, and it's a strategy pros quietly use to flip serious profits. Remember when ID launched on Binance? If you were holding before the listing, you could have made a 400% return within an hour. Where do you find these before the crowd? Track CoinMarketCal for rumored listings, follow Binance's announcement channels, and keep an eye on DEX liquidity spikes. Small signs often point to big moves. Want more alpha like this? Subscribe right now, because in my upcoming videos I'll be breaking down my personal checklist for spotting pre-listing gems before they moon. 3. The weekend trap reversal. Weekends in crypto? Pure chaos and opportunity. Most retail traders don't realize this, but weekends are when market makers love to play games. Volume drops, big players take a break, and manipulation runs wild. Here's the setup. Late Friday night or early Saturday, a coin dumps hard. Panic kicks in. Reddit screams, "We're going lower!" But behind the scenes, it's a liquidity grab. By Sunday night or Monday morning, that same coin bounces back. Retail sold. Whales bought the dip. Want to spot this trap? Look for sudden moves with low volume, long wicks, and no fundamental reason for the drop. Then wait for the reversal confirmation before jumping in. This one pattern alone saved me from getting liquidated more times than I can count. Drop a comment if you've ever been caught in a weekend fakeout. You're not alone, but after today, you won't fall for it again. 4. The low-cap, high-utility momentum window. Everyone wants the next 100x token. But here's the harsh truth. If everyone's talking about it, it's already too late. Instead, look for low market cap coins under $100 that are solving real problems. Think DeFi security, cross-chain bridges, or tokenized real-world assets. Here's what you want to see. Under-the-radar token consistent GitHub dev activity. Staking programs or token burns launching soon. Not yet listed on big exchanges. Growing on-chain metrics, wallets, TVL. These are called momentum windows. They're the quiet buildup before an explosive move. Example? Taro in 2024. It had solid fundamentals, barely any hype, then launched staking. Price tripled in 9 days, no influencers, just smart setup. This is what I focus on and what I teach here weekly. So again, make sure you're subscribed so you don't miss these hidden momentum setups. 5. The AI sentiment sync strategy. AI isn't just writing essays, it's reading crypto emotion better than humans ever could. There are tools now that scan Reddit, Twitter, Telegram, even YouTube comment sections and detect shifts in sentiment before price reacts. Let that sink in. If you notice a spike in positive sentiment around a token, but the price hasn't moved yet? That's your signal. Sentiment leads price, especially in crypto. Platforms like Lunar Crush, Sentiment, and Augmento AI help track this in real time. Look for coins with rising social scores but flat price movement. When both align, the pump usually follows. This is next-level trading. It's what gives you a head start while everyone else waits for confirmation. If you've never used AI in your trading strategy, start now. And if you want a full breakdown of how I use AI sentiment tools to front-run market moves, subscribe and turn on the bell, because that video is dropping soon. There you have it. 5 crypto trading strategies that the average trader won't tell you because most of them don't even know these exist. These aren't get-rich-quick hacks. These are tools. And if you learn how to use them, they can completely change the way you trade in 2025. Which strategy are you going to try first? Let me know in the comments, and if this video gave you real value, smash that like button, share it with a fellow trader, and most importantly, subscribe to the channel. Because I'm just getting started, and I've got even more advanced strategies coming your way. Don't just survive in crypto, dominate it.